all, welcome to Bro Billionaire. In this video, we'll learn about Nifty's move for the next week. So last Friday, it gave a huge candle and went 300 points on the upside. So you can see here the intensity of the gap. It opened, I think, 100 points gap up, and then almost 300 points, it closed in green. So temporarily, bulls looks to have taken the control back, and it has reversed from 17,250 levels. So in this video, we'll discuss the Nifty with price action indicators first, then we'll do the Elliott Wave analysis, and at the end, we'll check the option chain. So the global markets have also closed in green. So let's see the previous week's analysis first. In a previous week, we discussed a couple of charts. So one of them was this. There we explained in detail that Nifty could be in third wave, and right now has seems to be taking a different course altogether. So this could be wave one, this could be wave two, then this move that happened could be wave one, okay, and this could be wave two. So this could become a more uglier than we thought. And yeah, you can watch our previous videos. You can visit our channel and visit the playlist Weekend Nifty Analysis to understand in more detail what we discussed in the previous videos. So this chart also looks to be invalid. Let's delete this. And this chart, the second chart, has changed a little, but here we see a 0.6 Fibonacci. Okay, now we discussed 17,230, but it came 17,250, and from there it reversed. So this is partly right, but yeah, anyway, the wave count, internally wave count has shifted now. Let me show you the wave count. It now looks like this. Okay, so it now looks like this. 1, 2, 3, 4, 5. Okay, third completed here, fourth and fifth. I have my own doubts of this fifth wave. It doesn't look to be quite impulse wave, but still, if you go on the lower time frame, you might find it. So you can check that out. So this is how the previous week gone by. So we were here, we dropped, made one more low, but not went below 17,250. We were expecting a low near 17,100. That didn't happen, and Nifty has reversed now. So what are the chances now? Will the Nifty continue go up or down? We'll discuss that with price action indicators now. So the price action and indicators suggest here that we have closed above 13 EMA, which is a short-term moving average, and a 200 EMA. So this pink line is 200 EMA, this blue line is 13 EMA. Nifty has closed near those levels, and the next level that indicators are showing is somewhere near 17,800. You can see here a white line which is 100 EMA, and this yellow line which is 48 EMA. So probably price could be heading towards this one after the bullish gap up opening. Here RSI is still below 50, which can be considered as a neutral signal or a bearish signal. And here the R1 indicator has gone sideways. Last week it was bullish. Right now it's sideways. So there is it's not completely sideways yet, because red line is still near 88 and green line is near 56. If it continues to trade for longer duration, okay, and taking more time, then the R1 indicator can turn sideways, and that will be a problem for bears. So bears may not be able to come back if that happens, and we have to think of different pattern. So as price action suggests, there is a chance of pullback towards 17,780 to 17,800. So this was the indicator based analysis. Let's check the Elliott Wave. I just have only one chart for Elliott Wave. So this is the chart that I have. Looking at the bullish global markets, we can easily say Nifty will be heading higher. So when you plot Fibonacci on these 2 points, okay, so this is the point 18,134, from where the drop started. Almost 9 days continuously we saw a selling pressure, and here you can see that the 0.61 Fibonacci, when you plot on these two numbers, is coming at 17,800. So it's likely there is a chance that on Wednesday's session it might head a little higher, breaking the Friday's high, and then a start of fourth wave can be considered. So fourth waves are usually a dead wave and we cannot trade it. So on the closing itself, we were also looking here on this candle. So it might look to you as a start of fall, but end time candles are very risky to go and consider the carry the positions. So we need to consider next session with cautious. If it opens small gap up above this high, then we'll try to fill that gap and start the fourth wave on Monday session in first 1 hour. Okay, then we'll have fifth wave of wave C heading towards 17,800 in next 2 to 3 sessions. So by expiry, I'm not expecting anything to happen very bad. So either it will go till Friday, and yeah, if the correction doesn't last, then it will drop from 17,800 levels. So couple more things here. So this is something more scarier picture. So here it can be wave 1, this can be wave 2, so this can be wave 1 and this can be wave 2. So something like that also can happen, and then we can have a drop on the downside. So why we have a bearish approach? So let me tell you one of the secrets. You might already be aware. The fourth so the if you are considering this as a wave 1, so wave 2 has not retraced even a 0.32 Fibonacci as of now yet. So this can be a scary picture as well, and a 1-2-1-2 formation can also be there in the market. So we need to watch out that. So if the 1-2-1-2 formation forms, then there is a problem for us. So until this trend line is safe, so when you plot trend line on these 2 points, when you plot trend line on this, there is a still chance that the Nifty can still go higher. If it breaks this trend line, meanings the gap that is open here between 17,800 and 17,780, I think, or 760, until this gap is not filled, it's best to assume that there could be a selling pressure. Though this move of A wave is all bullish, this move of A wave, when you check even on 15-minute time frame, this looks bullish. So we cannot conclude as of now whether it will be a false correction or not. But things look bullish for next couple of sessions. So for now, I'm not considering Nifty to open below 17,500. So or even go beyond 17,500 and close in the next week. So if Nifty does not close below 17,500, it is still bullish. It will still head higher towards 17,800. That is the possibility that I have. So in next session, it might open gap up and face rejection somewhere near 17,700. So that's all what we can conclude from the Elliott wave, because here you can see it has dropped from 1.618 Fibonacci 17,650, but it's better to consider and wait for 0.32 Fibonacci to be broken. Okay, so this 0.32 Fibonacci, when you start from the low, it should give you some result. Okay, so for now 17,500 is a level which we need to consider. If Nifty closes below this on daily chart, then we need to revise the pattern. So let's move further. We had discussed this chart. It could be making 1-2-1-2 formation, and this is how we are expecting Nifty to move. So in next session, if it opens a gap up above 17,644, it's best not to go for fresh long positions, because it may not last a long, and wait to start the fourth wave. Even the fourth wave trading is very difficult. You can just do the scalping. It will take time, maybe Monday's second half and Tuesday's entire day it can spend in a fourth wave. It can make a triangle or a complex correction. A triangle or a complex correction can be like this. Okay, it can be a complex correction trading in this range, or it can be a triangle structure as well. Okay, a triangle structure like this. Okay, and then we'll go upside. So this is the way it can move in the next week. So I'll add the summary at the end. It's very short description. Below 17,500 close is not good for the bulls, and Nifty can still head towards 17,800. In next session, it can open higher than 17,644 based on the global cues. even if it opens flat, it's best not to go and short it, because this is quite risky environment to go and short the markets. So let's now check the option chain. That's all on the Elliott Wave front. On the option chain, clear winners are 17,500, where we have highest number of put open interest. So this is the major support, 17,500, and major resistance, the biggest number is at 18,000. So this is the range for you, 17,500 to 18,000 for this expiry. And yeah, there is no clear cut evidence here to give you the second levels. So obviously the second level will be right now 17,600. Okay, this is the second level, and here on the resistance side 17,900. So minimum range that we have is 17,600 and 17,900. So this is the secondary range. The major range obviously is 17,500 and 18,000. So here we don't have much to conclude on the option chain. Here we can just check the PCR now has turned to bullish zones. Okay, it went above 1. Volatility is still low. Let's see what happens in next week. Possibly first session on Monday it will be bullish. On Tuesday and second half of Monday it will be dull session. We will have very tight range if it is the fourth wave. And yeah, fifth wave should take us towards 17,800, somewhere near that level. And from there we could face the rejection. So that's all on the analysis. Hope you like the analysis. Do hit like and subscribe to the channel if you haven't already. Do ask if there are any doubts. We will try to solve those doubts. So I have already added the summary. You can pause the video and watch it again. So that's all. Thanks for watching. Bye-bye.